Japanese real wages turned positive for the first time in 7 months in July, supported by generous summertime bonuses that provided temporary relief to households. According to government data released on Friday, wages adjusted for inflation showed a modest gain, while consumer spending rose for the third consecutive month. The figures offered some signs of resilience in the Japanese economy, which has been struggling with sluggish wage growth and persistent inflationary pressures. However, analysts warned that the improvement might be short-lived as rising prices continue to erode purchasing power. Real wages, which measure employees' income after adjusting for inflation, had been declining for months due to higher living costs driven by elevated global commodity prices and a weaker yen. The turnaround in July was largely attributed to one-off summer bonuses traditionally distributed by companies during this period. These bonuses temporarily lifted household incomes, allowing consumers to increase spending on travel, dining, and durable goods. Household spending rose steadily, marking the third straight monthly increase and suggesting that pent-up demand from the pandemic era is still influencing consumer behavior. Despite the positive headline numbers, policymakers remain cautious. Officials from the Ministry of Health, Labor and Welfare noted that while the wage data is encouraging, the underlying trend in regular monthly pay remains subdued. Many households continue to feel squeezed by rising prices of essentials such as food, energy, and housing. Economists have pointed out that unless wage growth becomes sustained and broad-based, real income gains will remain fragile and consumption could weaken again in the coming months. The data also complicates the policy outlook for the Bank of Japan (BOJ). The central bank has been gradually moving away from its ultra-loose monetary stance after years of negative interest rates and heavy asset purchases. With inflation staying above its 2% target for more than 2 years, market participants have been anticipating further rate hikes. However, the BOJ has been reluctant to move aggressively, citing uncertainty about the durability of wage growth and risks to the fragile economic recovery. Friday's figures are likely to intensify the debate within the BOJ about the timing of its next policy adjustment. Some analysts argue that the improvement in wages and consumption provides room for the bank to consider tightening sooner rather than later. Others believe that the positive wage growth in July is largely seasonal and not reflective of a structural change in the labor market. They caution that hiking rates too quickly could stifle growth and undermine household demand, especially as real disposable incomes remain under pressure. Looking ahead, much will depend on whether companies continue to raise base pay as they did during the spring wage negotiations earlier this year. Sustained wage growth is seen as critical for Japan to break out of decades-long deflationary tendencies and achieve stable inflation supported by domestic demand rather than external factors. If firms translate strong corporate profits into higher salaries and bonuses on a consistent basis, households could maintain spending momentum despite inflation. Conversely, if wage growth weakens after the seasonal bonus effect fades, the recent uptick in consumption may prove temporary. In sum, the July data provided a welcome sign of relief for policymakers and households alike, but the path forward remains uncertain. Japan's economy continues to face a delicate balancing act between supporting growth and managing inflation. The coming months will be crucial in determining whether the latest wage and spending gains mark the beginning of a more durable recovery or just a brief respite from inflationary pressures.